Okay, so let's talk about gold. What we can see here before we get into the top-down multi-time frame analysis, I just want to show you guys this particular bit of price action. Okay, now here the market was consolidating for a considerable amount of time. Off the back of geopolitical tensions increasing between Israel and Hamas, we saw a huge push to the upside. Okay, and I believe this huge push to the upside is just the start, and we are going to see higher prices in gold. So, now after I've explained that, we're going to get into the full top down picture because we see potential intraday opportunities lining up and then potential swing trading opportunities lining up. So, I'm just going to clean my charts and we're going to start from a monthly perspective. So on the monthly time frame, what we can identify is we've obviously got a bullish market, okay, but the market is testing significant prices, which is all-time high resistance. Okay, we have 1, 2, 3 triple top rejections at all-time high prices. However, if you have a look at this price action from a monthly perspective, what I perceive this to be is we had a wedge exactly here. Okay, we had this monthly wedge, this monthly range. Now, the market broke the range to the downside, broke the accumulation to the downside. Whether you look at it as a range or a wedge, whatever you perceive this to be, it was a range. Okay, the market was consolidating rather, accumulating. We broke the range to the downside, as I just said here. Now, this, in my eyes, was a manipulation because ever since breaking to the downside, we broke straight back above. We broke straight back above. We've rejected all-time high prices, but we are bullish. We have this move here, impulsive move, breaking above body resistance. Then the market provided us with a retracement, and now I expect to see the continuation to the upside. So I'm going to make a very bold statement, and I believe that gold could be heading towards all-time high prices. And I believe the geopolitical tensions, the geopolitical crisis that we are seeing in between Hamas and Israel right now could be a driving fundamental factor to push gold higher. So from a monthly perspective, we've got this big fake out to the downside, then we've got a break back above, and I am bullish and I'm expecting potentially new highs to form here on gold. We obviously have this equal high liquidity as well as a potential area in which the market should get attracted into. So we have this impulsive move, corrective move, and we're looking for a continuation. If you take your Fibonacci from the low to the high of the impulsive move, you can see that price perfectly, since making the impulse, provided us with a retracement. The retracement tapped into psychological level of 1800, tapped into the 50% of the Fibonacci, and now it's started to make the move to the upside. So if we want to gauge a potential upside target from a monthly perspective, we take our fib from the low to the high of the corrective move. And my upside target for swing trades, my overall bias for gold is new all-time high prices at around 21.35. Okay? So now we drop down to the weekly time frame. What we can identify from a weekly perspective, since the market made this sweep of these lows, right? We have support, 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 support. We have a triple bottom. The market swept the triple bottom here. We made this manipulation. Okay, ever since making that manipulation, as I've just stated, the market's been in an uptrend from a weekly perspective, making a series of consecutive higher highs, higher low, higher high, higher low, higher high. Then the market, since making that new higher high and rejecting all-time high prices, has made a retracement. The retracement respected the previous higher low and formed a new higher low. So I expect to see a higher high. Again, if you look at this price action right here, look at the strength of this impulsive move and look at the weakness of this retracement move. The buying pressure here is a lot stronger than the selling pressure here. You can identify that by simply looking at the size of the candles. You don't need to use a volume indicator. You can see these are high volume moves. These are low volume moves. Now, if you have a look from a weekly perspective at this price action, like I just said to you guys, the market here was consolidating, right? We made the impulse, we made the retracement, we filled this level of imbalance that we have here, right? And then the market started to consolidate. During this consolidation, we formed a double bottom. This induced a mass amount of traders to go long. On the inducement of this accumulation, where do you think the retail traders that went long on this double bottom, on the retest of this fair value gap, okay, where do you think their stop losses are? Their stop losses was below this range. What happened then? The market on FOMC a couple of weeks ago melted into their stop losses. Perfectly, coincidentally, just before the attacks on Israel by Hamas. As soon as the attacks happened over the weekends, last week we saw a fucking huge push on gold. And that was off the back of the news between the geopolitical tensions rising. Okay, like I said, geopolitical tensions rising leads to uncertain markets. Uncertainty in the markets leads to investors putting their money into safe havens. Gold is always been considered the number one safe haven, or one of the number one safe havens. So you can clearly see how that was priced into the market last week. Okay, now with that being said, what we've got from a weekly perspective, like I said, is the higher high, a massive bullish engulfing, an accumulation, manipulation, distribution pattern from a weekly perspective. Okay, so I am bullish from a monthly, weekly perspective, and I'm looking for higher prices. Now, if we go down to the daily, this is where things get really interesting, because on the daily, okay, you can see exactly what I said, just in a different perspective. Now, the perspective that I'm referring to is if you draw this horizontal level of support right here, okay, and this descending trend line resistance right here, you can see that price is trading, or was trading, in the range of this descending triangle. We were trending in this descending triangle, and like I said, the market printed this double bottom here, induced buyers, then boom, took their liquidity. What do you think happened on the breakout of this descending triangle? Traders, then retail traders, are taught to trade the retest of a breakout, which is absolute nonsense, right? They probably entered on the retest of this level of previous support, which they expected to be resistance. Where do you think their stop losses were? Here, above this high specifically, protected above this descending triangle. Okay, so now the liquidity here, all inside of this area, has been removed with this move to the downside. Sellers have been induced, buyers have been stop hunted. Okay, now the liquidity for me is all inside of this area above this descending triangle, which fits my overall perspective, which I've just explained. So I believe this to be a huge fake out right here, and now we've broke back above. What we can also identify from a daily perspective is we've got these double tops, these equal highs, which just gives you even more liquidity above that zone. With all of this being said, okay, you've understood my monthly, weekly, daily bias is bullish. However, however, we are overextended to the upside off the back of that huge push last week. Okay, we've just taken out the high of the previous week, which is exactly there. There would have been a large amount of stop orders above the high of the previous week, and we've just taken that level out. Now, if we drop down to the 4-hour time frame, from a 4-hour perspective, you can see that the market is testing this supply zone. This is the origin of the bearish impulsive move that was created or induced from FOMC a couple of weeks ago. Now, this is a level of supply in which the market can react from. And although based on the monthly, weekly, daily timeframes, I am bullish and I'm expecting these highs to be taken, okay, what we could see before those highs get taken out is the market to provide us with a retracement. Why? Because we have this internal liquidity exactly here in the form of this fair value gap. Okay, we've taken out the external liquidity, and we could easily, after this impulsive move, make a corrective move, fill this internal liquidity, come back down, retest 1900 psychological level, which we've broken above. Okay, notice how we broke below 1900, broke back above. We could easily make a retracement move into this level before pushing higher. And as you can clearly see here, that would also form this left shoulder, head, and right shoulder, which is a textbook pattern when the market makes a manipulation. Here we have the support. Here the head creates the manipulation. The move to the upside is the break back above, and the right shoulder is the retracement after the impulsive move from the manipulation. So this all fits perfectly with my overall projection. However, it has to be said, guys, it has to be said that we could easily break through this zone without providing a retracement, because there is a lot of liquidity above this double top. That is just a risk that we have to take. So all in all, to conclude my video, I am bullish on gold. I am expecting price to maybe even go for all-time highs, okay? At least I'm expecting the market to come into that level of imbalance we have exactly at the psychological level of 2000. Okay, so my projection is we're expecting gold to hit 2000, maybe even all-time high price at 2136. However, because the market is overextended to the upside after yesterday's bullish, last week's bullish momentum, we could easily see a retracement. So how I'm going to be approaching this with students, I'm going to be potentially looking at capitalizing on the retracement move. So now if we go to the 1 hour time frame, okay, what we can identify from a 1 hourly perspective is we have this beautiful imbalance from that wick high to that wick low, the origin of the bearish move, we left behind in balance. And as you can see, we have perfectly filled that imbalance as we speak. We've taken out the high of the previous week here, where all the stop losses were, and we're filling in this imbalance. We've also taken the market, the stops out of this range that the market has been in since Monday. We have been in a range, relatively low volume, low volatility at the beginning of this week on gold as the market cools off after that huge move that we saw on Friday. So potentially here, what I'm looking for is this intraday accumulation, manipulation, and a retracement into that level before higher prices. Okay, so with all of that being said, now we drop down to the intraday timeframes, which I've already marked out. Now, if we just zoom out to the 15-minute, look at this, right? So bear in mind, price is testing exactly the 50% of that 4 hour supply zone, in confluence with psychological level of 1940, in confluence with that 1 hour fair value gap, right? So we have a zone of confluence which the market is currently testing. We have this massive move to the upside during the Asian session. Why did we see this massive move to the upside? Because a lot of traders got trapped short here yesterday. A lot of traders got trapped short here yesterday on the retest of that supply zone. Why is this a bad place to look for a short? Because it is below the low of the previous week, and there is always a huge amount of liquidity below and above the highs and the lows of the previous week. So traders got trapped short here yesterday. Where's their stop losses? Exactly in this area, exactly where the institutional traders have their entry. Okay, so the market induced you here, pushed to the upside, hit the institutional traders' entries, and now started to make the move to the downside. So this is where we have potential intraday setups lining up. Also notice how the market has printed this huge macro M formation. Inside of the second leg of the macro M formation, we have the micro M formation. And this is exactly how the market likes to create manipulations before a reversal. You can see we've taken out these highs, we've taken out these highs. Now the only high left to take out is the Asian session high. Now, when the Asian session is trending, if you're looking for a trade in the opposite direction, there is a high probability that the market, before making the move that you expect, the market will take out the buy side liquidity above the Asian session high. There is always a huge amount of liquidity above and below Asia high and low. So what I'm looking for here, just to conclude, is a break above this zone. Once the liquidity has been swept above Asia high, I'm looking for either a railroad formation or a market structure shift, one of my valid entry confirmations, to look for something like this. Okay, and if gold follows my projection nicely, then don't forget my overall bias on gold is very much bullish. Okay, so we have potential intraday shorts lining up, and if the market follows my projection, this is where we can reposition ourselves long. That's it from me, guys. I hope you enjoyed this in-depth top-down price action analysis. Don't forget to join our free Telegram group. The link is in our bio for more education and analysis.